Welcome back, everybody. Right now, it's time for the Executive Edge. Hedge funds lost money in 2018, but there is a silver lining. Leslie Picker joins us with that side of the story. And Leslie, good morning.
Hey, good morning, Becky. The average hedge fund lost capital in 2018, about 4.07%. That's the bad news. The good news, they actually beat the total return for the S&P 500, and it's the first time they've done so in a decade. Last year, hedge funds generated about 31 basis points of alpha. The last time hedge funds outperformed was in 2008 during the depths of the financial crisis. Coincidentally, the last time the S&P 500 posted annual losses. Hedge funds posted 18 percentage points better in returns back then, but again, they still lost money. So why are investors still parking money with hedge funds? Why are they still paying fees to an industry that can generate alpha, but when they do so, still fails to preserve capital? Investors say just because the average manager lost money doesn't mean they all do. The world's largest hedge fund, Bridgewater, posted double-digit returns in 2018, as did D.E. Shaw and Renaissance Technologies. The long-short managers, however, the ones most exposed to equities like Greenlight, Glenview, and Third Point, they saw double-digit losses on the year. And of course, investors' patience is wearing thin. After a decade of underperformance, a little alpha doesn't go too far if they're still losing money, guys.
Leslie, I remember going back to 2007, 2008, just before things really took a turn. Hedge funds had exploded just in terms of the number of them that were out there. I think there were more than 8,000 that had built up. Sure, the average may be pretty lousy, and I guess it just goes to show that you've got to be careful which ones you pick once again.
And it's obviously more of an art than a science, and people talk about all of these things like if, just because someone has past performance that's bad doesn't mean that their future performance is going to be bad as well. It could revert to the mean.
Or the opposite is true. Just because you've had great performance in the past doesn't mean
we're saying this with a straight face. It's been 10 years since they beat the S&P.
10 years, a whole decade.